Matron, take them away.
Okay guys, hope you're well. Big Scruff here. I just want to have a little chat while I'm having a cup of coffee, because we all know Scruffy likes a coffee, and just throw something into the mix about fundamental trading. And does that really affect the Forex markets as much as what you think? Interesting subject really, because it's an argument that traders have been having since the day the market started. Now, if you're a day trader, how much weight do you think fundamentals has against the trade you're about to take? Well, my personal take is next to none. Absolutely none. It's interesting to talk about it, and you'll often see sort of in the forums everybody arguing about this, that and the t'other. But the question I'll be asking myself is, are you actually profitable? Because you can talk a big game, but doesn't mean say you can actually do the salt. Now, you watch me pretty much every day trading the market, and I trade in the moment, so I can't be any fairer than that. But I also tell the guys in the squad what I'm doing before I'm doing it. So they've got a good idea of what I'm looking at. Now, the difference is I know when to not outstay my welcome, I target appropriately, and I'm sensible. But has any of that got to do with fundamentals? Diddly squat. Absolutely nothing. I read the markets. I read what I see. And until the market tells me otherwise, I go with what I see. I don't rely on gut feeling. And gut feeling is where fundamentals come into it, because it's how you interpret that data. You know, you might interpret that it's good data, so the market's going to turn, it's going to do this, it's going to do that. But what if it's bad data? Does that mean it's negative the other way as well? Well, not necessarily. You've got to think about this, and you've got to think about it logically. And this is how I work it out. This is how I sort of interpret in my mind what's going on. If I'm swing trading, then fundamental has a lot to do with what's going on. A lot. And that's because we are looking for weeks and months as traders. Now, if there's a bump coming on the horizon, sort of the effect of an interest rate, that can decide whether or not I'm going to kill or stay with the swing trade, because there's going to be enough data inside the chart that I can see what that news event is going to give. But is that news event going to affect the next 10 minutes? No, not at all. So you look at it in a different way. If you look at your economic calendar, you will see high impact, medium impact, low impact. Low impact, medium don't really do much to the market. There might be a little bit of a flurry, but nothing to sort of sing home about, just a little bit. But if it's high impact, interest rates, CPI, non-farm payroll, this sort of thing, they can shake the market. Will they turn the market? On occasion they can. But normally they don't, you know. But what they will do is spike the market. There's a big difference. So if I know this spike is coming, then isn't it common sense just to not trade it at all? Because, as we said, when you're looking at the breadcrumbs inside of the news, we don't actually know how the market was going to react to it. Many times, non-farm, you see some good figures, but the market just tanks. Why? Well, because there's normally an underlying current to it. And it's an underlying current that you're not really privy to or understand what it is. But what you can understand is what you see. So if you're looking at a market and you can't really weigh it up, well, there's a simple answer to it. Don't trade it at all. If you can't see a trend in it, don't trade it. If you can't see a setup in it, don't trade it. And the key word there is what you see. Okay. Now, when you're reading fundamentals and you're trying to get into it and you sort of understand all these little nuances, do you really understand it? And if you don't, how on earth is that going to affect your decision? It can't. But the way I look at it is, will it affect the next 10 minutes? Or will it affect the next hour? Because that's all my trade's going to be. You know, and throughout a day, a market will move up, it'll move down, it'll stall, it'll do all of it. So you can have two traders, two. One of them is going long, the other is going short, and they can both be right. So if they're both right because of this situation, where does fundamental come into it? Something for you to think about. Let me show you something, just very quickly, because it's a good market to kind of illustrate this on. Now, this morning, if I just take these away, take my marks off, I was talking to the guys about this very not so much fundamental subject, but how you can have a market that appears to do one thing and you're trading the other. So if you see it going down, you're trading long, or if you're going long, you want to go short. So you're contrary to what the market is. But if you're always looking at the big picture, you've got a chance. So in this case, that hourly, where are we at? That's about 8 o'clock. Up to this point is moving down. That's it. It's moving down. But you could have a trader say, well, I think it's going long. And you can still have a trader thinking, I'm going short. And what I was telling the guys is, when you're day trading, you don't outstay your welcome and you target appropriately. Well, on a chart such as this, about 10 pips is about right. Okay? It's a safe target. You can get in, you can get out, you get paid, you go about your day. Very, very simple. Okay. So how else can you do this? If you go to the daily, well, that's still pushing down, whether you like it or not. Might be a bit of resurgence here, but it's still red. All right, it's just pulled up. Nothing wrong with that. But until this says otherwise, it's going down, and the chances are it's coming down into these clusters. But that's what we're looking at. But it's also found a level here, which it's probed through, and that's a cluster. It's probed down onto that one, and then the next one would be down here to catch these, all right, which it still may do. Okay, but that's a daily. It's quite far out. You're getting an idea of what's going on. 4 hour. Well, as we came into this session, that was slamming down. So no reason why that can't continue to move down. Okay. So you come down into your trading time. Now for me, it's about 9 o'clock. Do my homework, then I'll do my my executions. So let's have a look. So it's about there. Okay. 2 traders. Very, very simple. Simplest system in the world is a double break of a zone. Simplest system. Okay. So let's find 9 o'clock. There's 9 o'clock. Okay. Here's your zones here. Just pull that across so we can highlight these things and show you. There's the zones. Okay. So you're looking for a double break. It's a double break. There's one break at the level, breaks out of the zone. Double. Red, red. You can even look at it as a double break outside the zone. If you want to be a little bit sort of go with the flow. So again, break, break. Breaks the zone. Second one. Put your order in in and around here. You've seen me do it 101 times, where you will count back 5 pips, where 5 candles rather. So 1, 2, 3, 4, 5. About there's right. Even up into the body somewhat, but that's the extreme. You look for roughly about 10 pips. Pull that down. There's your 10 pips. Would have clipped you here. Okay, so there's 10 pips. Easy. All right, took it half an hour or whatever it was. So your short seller won. All right, great. What about the long sell? Well, do the same thing. You're working on red zones. If you're only working red zones, you can work a green zone as well. But the red ones are what I prefer. Again, you're looking for a double break. Well, that didn't go above. That didn't go above. Came back. 1, 2. Enters your market. Same day. Different trader. Well, I'll tell you now, that's 10 pips. Without even looking at it. Right. There you go. What's the relevance of both of them trades? They both went into something that was pre-marked and works. Both of them are right. Where's the fundamental in it? There isn't any. There's only one element in that. And that is patience. And then there we go. This can be a resurgence, which it is. And if that's pulling back, it's coming up here into this cluster point right here. And then it might go up, bounce, and carry on in its journey. And why? Because when we're looking at this hourly chart, that's what markets do. It might be predominantly down, but it's going to have these motions in them as well. Now, inside the hourly, these motions are going to be there as well. So again, you have a conviction, you stick with it, and it works. Simple, time and time again. So how does that translate into what we're talking about? What it means is you can have a market structure. In this case, it's my levels, my zones, and a conviction. And the conviction is going with what you see, not what you think. The market can turn at any time, and it often does, right? But how far does it turn in the grand scheme of things? If you're looking at that hourly pullback, it looks vicious as hell on a 5-minute chart. But in the grand scheme of the hourly chart, it's not a reversal, it's just a pullback. So if you're a short seller that's incredibly patient, you could have waited for that pullback and then get in at a massive price, but you'd be waiting to the end of the day. Or you can trade conservatively, go, well, there's a double break, I'm going into the next zone and I'm going to target appropriately based on an ATR. Simple, simple stuff. And that's my take on sort of fundamentals. Are they necessary? Not when you're day trading, not really. And if you're scalping for under 20 pips, in fact, fundamentals will probably cause more issues than cause good karma, if you like, because you'll be looking for something that you can't actually see because you're zoomed so far in. But if you zoom out to a daily and you take your fundamentals from the daily for a multi-day to multi-week move, then it maybe has a bit of credence. But if you're looking for a multi-minute move, you know, an hour, 2 hours, does what's happening in the world arena really going to affect that hour? Not really. Just something for you to think about. The way I do it is 80-20. 80% of what we do is technical, 20% is fundamental. Why? Because there's more technicals than there is fundamentals. But the only fundamentals I need to know is the press release, when they are getting released with the numbers. Because up until that point, I haven't got a Scooby what's going to happen. So for about an hour before the news, I will stay out the markets, let the news event happen, let the initial spike go, and then carry on trading once I've seen the dust settle. That to me is the way to look at the news. So if you're stuck, very easy found. You find all my contact details down below. I do answer every single one of them. And if you drop a comment in, I answer every comment personally as well. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.